All right, those of y'all that tap in with me know I like to give game when it comes to investing. I like to give game when it comes to investing, and I'm trying to show y'all how to get to the game. But before, I've talked about a lot of things. I've talked about a lot of resources. I've talked about a lot of terms. I've gave you a lot of game. I've gave you a lot of game, and there's a lot of game still yet to give. So please like, share, and subscribe. Please share this video. Send this to anybody you know that wants to get into this investing game and wants to get started in 2025. Because I think it's important that everybody gets this game, that everybody gets this game, that everybody starts today, starts their investing journey now. I say this with all seriousness and all sincerity. If you do not start now, I promise you, you're going to miss out on life changing money. And 5 years from now, in 2030, you're going to highly regret it. You're going to highly regret it. It's getting to a point, inflation is going insane. It's going insane. The prices of goods and services are only getting higher. We have tariffs looming that's going to send prices even higher. Times are going to get harder. Things are going to get more expensive. You have to invest. You cannot outwork inflation. You can't. Your money has to be working 24/7, 365 days a year. And that's why we're here. That's the game we want to teach you. It's a lot of resources, a lot of people giving the game. I'm doing my part. I'm doing my part. So today, what I'm about to show you, what I want to talk to you about, especially heading into 2025, something that I think is critical, something that I think is important before you even get to anything about investing, is investor identity. Investor identity is very important. Investor identity is how you're going to know what am I going to invest in, what am I not going to invest in. What is my risk tolerance? How much risk am I willing to take? What sectors do I want to invest in? What sectors don't I want to invest in? You know, do I want to invest aggressively? Do I want to buy individual stocks? Do I want to go the ETF route? Do I want to go dividend stocks or growth stocks? Do I want to day trade? Do I want to do options, calls, puts, leaps, futures? You have to know your investing identity in order to determine any of that. Before you get started, you already need to know what your investing identity is. You need to know what that is. So, I'm a big proponent of ChatGPT. I like to use ChatGPT a lot. I like to use ChatGPT a lot, and I like to preach that people use ChatGPT a lot because it's just a great tool. It's a great tool. It's a great resource, and it's going to give you a starting point for a lot of things. Give you a starting point, get your wheels turning, get your wheels spinning, and then you can go and do the rest. You can go and do the rest. So, what I'm going to show you is this. Um, let's see. Investor identity. Oh, shoot. Okay. You see, it's pulling up. An investor identity is a clear understanding of your personal investment goals, values, and strategies that guide how you approach investing. It reflects your risk tolerance, time horizons, financial goals, and investment philosophy. It's giving you a breakdown. Now, when we're talking about reflects your risk tolerance, only you know how you feel when you lose money. Only you know how you feel when we have red days. Only you know how much money you feel that you can afford to invest. How much money you want to allocate to investing. You know, only you know that. You have to know your investor identity. You have to know that so that you're not putting yourself in uncomfortable positions. You're not putting yourself in a position where you're putting in more money than you can afford to invest. You're not having to go and dip into that. You know, you have to know these things. You have to know your risk tolerance because you need to know that if you have a low risk tolerance, there's certain things you may not want to invest in. You may not want to invest in highly volatile stocks. You see what I'm saying? You may not want to invest in things that can go up 30% and drop 30% the next day. You see what I'm saying? You might want to go to ETF route. You need to know, your risk tolerance. You need to know that. You don't need to have a low risk tolerance and be investing aggressively. You got to know your risk tolerance. Okay? We're talking about time horizon. Are you young like me? If you're young like me, I invest aggressively. I invest aggressively. I'm young. You know, if something were to go left, I have time to recover. Say you're older, you're 50, 60, closer to retirement, you may not want to be investing that aggressively. You know, if you're that age and you're looking to retire soon, you may want to take a more defensive approach to your investing strategies. You know, and that's what they mean by when they're talking about risk tolerance, time horizon. You know, I have more time on my side. I could be more aggressive. You know, I can even invest less money and get better outcome because of compounding interest. Versus if you're older, closer to retirement, you may need to invest more at a faster, higher rate. You know, so you have to know your investor identity. You have to know what applies to you, what doesn't, so that you can invest accordingly. When they're talking about financial goals, again, you got to know your financial goals. You know, you have to know your financial goals. Do you want to actively manage your account? You know, do you want to be in individual stocks? You know, do you want to just protect the lump sum of money that you have and you want to see slow growth? You're going to get an ETF, a dividend ETF like SCHD. You want to get dividends? You know, do you want to give your money the maximum growth potential? You got to know your financial goals. You got to know your financial goals, you know, so that you can invest accordingly. Your investment philosophy. You got to have an investment philosophy. You know, you have to set these things in place so that when things go wrong, you have something to fall back on. You have something to fall back on. You have to have a philosophy. You have to have an identity about yourself in this investing game. So when things get rocky, okay, I believe in my philosophy. I believe in what I've done. I believe in my identity as an investor. I believe in my research. I'm good. I'm stable. You know, if I'm just willy nilly in it, haven't thought about any risk tolerance, haven't thought about any goals, I'm just buying anything that I hear about, it's not good. That's not good. That's not good. If I'm 50 years old and I got $300,000 in an IRA and I take the whole 300,000 and put it in Tesla and Tesla go down 40% and I'm down bad, that's not good. That's not good. You have to know your investor identity. You have to know how you should be investing. You have to know how you should be allocating your money. You need to know these things. Okay, so when we're talking about risk tolerance, we've talked about that. Investment goals, time horizon. Another thing with time horizon, how long do you stay invested? How long do you stay invested? That kind of goes down into some little more in-depth things, but paying attention to the news, tracking your companies, knowing what's going on, paying attention to earnings calls, being not necessarily fiending over it or just watching it every single day, every minute of the day, but you have to keep up with what's going on with these companies. You have to know when to get out. You have to know when to get out. You have to know when to take profit. Set some stop losses, especially if you're in volatile stocks. Have a plan set. Okay, I get up 100%. I'm gonna take some profit off the table. I fall to a certain level. I'm gonna cut my losses. You got to have these things in place. You have to have these things in place. A longer horizon often allows for more risk and growth oriented investments. That's what I'm talking about. I'm younger. I'm younger. I have more time on my side. I have compounding interest. I have the ability to recover if I make a bad investment, if I make a bad decision. If you're older and you're closer to retirement age, you may not have that same leeway. You may not have the same leniency in your investing decisions. You may not want to be investing in certain things, taking certain risks. See what I'm saying? Okay. Values based investing. Do you prioritize environment, social, and governance factors or ethical investing? Ethical investing is a big topic. Some people, don't want to invest in certain things due to certain ethical, moral values. If you're someone that's, say, a Democrat, you're someone who doesn't like Trump and what he has going on, and you say, okay, I'm not gonna invest in Tesla or anything that has to do with Elon Musk or any of those guys. I don't want to be involved with that. That's what we mean by something like ethical investing. You have to know those things, set those things in place. And and for one, it's gonna take you to be informed on these companies anyway to even know who's running what and who's involved in certain things because you may say, okay, I don't want to invest in anything that Elon Musk has to do with. That's gonna X you out of a lot of companies. Elon Musk got his hands in a lot of pies. He's in partnership with a lot of companies, partnerships with a lot of other organizations. So that's what they mean by that. Are you drawn to specific industries like technology, AI, renewable energies? Know that. Know that. That'll tell you, okay, these are the sectors that I want to have exposure to. These are the sectors that I'm interested in. Another thing, invest in sectors that you have knowledge of. Invest in sectors that you understand what's going on with these companies. Don't invest in things that you do not understand. When you invest in things you do not understand, you're putting yourself at disadvantage. When you invest in things that you don't understand, you can't understand if that company has a moat or not. You can't understand if that company is running the business how it should be ran. You can't understand things about the company that you need to know. You can't understand the research and development, the things that they're investing in, the technology that they may be using, or this or that. You have to be able to understand what you're investing in. If you can't understand it, don't invest in it. If you can't wrap your mind around semiconductors and quantum and it makes no sense to you and you're drawing a blank, either two things. You don't need to be investing in that, or you need to go do some research, understand what's going on, understand the landscape, you know, understand what's going on, what companies are serving what purpose, and then invest in that. So you have to know these things. Knowledge and interest. That's kind of what I was just talking about. Don't just invest in Tesla because you like Elon Musk. Actually know if Tesla's a good company. Know what Tesla stands for. Know what issues they solve. Know what problems they address. Know if they have a moat. Know about the company's financials. Know about the management team. Don't just invest in something because, I'm interested I have a Tesla, so I'm just investing in Tesla. That could be a bad financial decision. Do your due diligence. Diversification preferences. Know how you want to diversify your portfolio. If you want to have a good mix, you want to have some individual stocks, you want to have some dividends, you know, you want to have some ETFs going on, you want to have some money on the side to get in some options. Know how you want to diversify. I did a video before showing you how you can use ChatGPT to kind of structure that, to see how you want to balance out your portfolio. Know how you want to structure it. Know how you want to structure it. That's very important information. And they talk about a philosophy. Are you a value investor seeking undervalued assets, a growth investor targeting high growth potential companies, or a dividend investor focusing on consistent payouts? Know which one you want to be and invest accordingly. You may be a mix of all three. You may be a mix of one or two. Know that. Structure out your portfolio, how you want to spread your money around, and invest accordingly. But in order to go about being an intelligent investor, a strategic investor, and invest in companies and businesses and investment vehicles that are going to be best for you personally, you have to do your due diligence. You have to answer these questions about yourself. You have to know your investing identity. So I want you to take time. Take time looking over these things. Take time looking over these things. You can go to ChatGPT. You can type in investor identity to pull up some of these things. You can look this up on things like Investopedia. You can Google it. Look into your investor identity. Answer these questions about yourself, and then be ready in 2025. Put your plan into action because you deserve to be rich, man. You deserve to change your life. You deserve to get access to this game. Hey, man, it's not that hard. It's not that hard. Investing in the stock market don't care about race. It don't care about ethnicity. It don't care about sex. It don't care about your background, your criminal record. None of that. That's what I love about this game. Everybody has access to it. All you need to do is learn the rules to the game, you know, take care of your finances, pay off your debt, allocate money to this thing, have a little sacrifice, have a little discipline, and enjoy the profits. Enjoy the profits. Do your research, watch your CNBC, understand your investing identity. And man, if you got value from this video, please like, share, subscribe. Man, I have a lot more content coming like this. I have a podcast also coming out called Over the Counter with my co-host that you'll probably meet soon. We talk about investing in the stock market, crypto, a lot of other things, But if you enjoyed this video, thank you for staying here to the end. Thank you for tapping in with me, man. I am very grateful, extremely grateful. I'm new to the whole YouTube thing. I've been around for a month and some change. I put out videos every single day. So tap in with your boy, man. Like, share, and subscribe. Thank you for being here. I'll catch you in the next one.